the coming slaughter of the bond markets, similar to the one in the 1970s, after the Vietnam War, after the oil crisis, and after the Great Society of President Lyndon B. Johnson. Stay invested in short-dated paper. Don't get stuck in longer-dated paper, because the world has changed. Rates are no longer going to decline. Yields will not decline. It's the 16th of January 2023. Please subscribe. The world has changed for good. Just imagine, Western governments will be forced to issue trillions of government bonds to finance their debts, to finance the war, to finance things like climate change. The UN expects a few trillion in 2030 from the West. Otherwise, the question is, who will buy all these bonds? So the only way to survive is to own short-dated paper at ever higher yields. That was the way to survive in the 1970s. And nobody thought interest rates would go to 20%, but they did. There is even a chance that governments are forced to monetize some of their debts again. QE, quantitative easing. After QT, quantitative tightening, which they are doing now. Bond investors will be at severe risk, because the so-called terminal rate, that's the peak level of interest rates set by central banks, may be raised much higher than expected, and they may not pause. They may have to keep rates very high for a very long time. So, this is the time to be flexible and to forget the past of the last 40 years. That was paradise. Today, you have to prepare yourself for the unthinkable. Thank you. Until next time, and please subscribe.